Many thanks for being there. Now, the Nigerian banking industry's average net liquidity has decreased to 300.68 billion naira in August 2023 from 562.04 billion naira in the preceding month, according to a report published by the Central Bank of Nigeria. The moderation in liquidity has been due to the auctioning of CBN bills, federal government bonds, NTBs, and cash reserve ratio debits. The amount of CRR debited by the CBN from banks in Nigeria varies depending on the specific date and the bank's individual circumstances. The current CRR in Nigeria is 32.5%, effective May 26, 2023. This means banks must keep at least 32.5% of their total deposits in a non-interest-bearing account with the Central Bank of Nigeria. At this moment, to further discuss this, I'm being joined by Kenneth Ikenwa, business, political and public policy analyst and lecturer at the Department of Business Administration, University of Lagos. It's nice to have you around, Kenneth Ikenwa.
Thanks for having me on. Good evening.
In your own opinion, what impact will the decline in liquidity have on foreign exchange rates in Nigeria?
All right, as usual, to go straight to the point, the liquidity rate levels in the country today, as it stands, seems to be gearing towards contraction. A lot of people do not understand the micro and the macroeconomics behind that, but it may portend well, for our battle against the depreciation of the naira against the dollar and other international currencies, if it is properly managed. So that means that people would not have as much money as possibly can get, maybe perhaps borrow from banks to do their transactions abroad and to buy foreign exchange, reducing the pressure on the external reserve of the country and also the pressure in the parallel markets and the floating of the dollar or the naira against the dollar. All of that put together definitely reduces the pressure on the naira. And like I did say, the most important thing is how we actually manage this transition or this present impasse. So a squeeze in liquidity definitely will have immense multiplier positive effects on the Nigerian foreign exchange rate and on the economy, as it were.
So do you also think that the decline in this liquidity will lead to an increase in non-performing loans in the banking system?
All right, NPLs. That's a very interesting concept and one of the problems that we have been having in the economy in the last decade or so. No, on the contrary, the reverse will actually be the effect. Now, you did mention the CRR, which stands at 32.5%. Another important instrument, monetary policy instrument that the central bank makes use of in controlling the flow of money in the economy and, as it were, liquidity, is the monetary policy rate, which currently stands at 18.75%. So what that means is that at 32%, it means that the banks will not have too much, cash reserves to be able to give out loans to corporations or to individuals, to do whatever they want to do to transact their businesses. But when the cash reserve is low, the CRR is low, it means the banks have more money, with them, and they can reduce the interest rates and also have more money that they can lend out. So as it stands, it is not going to affect non-performing loans, but it's going to reduce the exposure of banks to have enough cash in their reserves to give out loans when they have not already recovered non-performing loans. And that's why a little under a week ago, the central bank governor, the central bank came out and did say that it wasn't going to lend money to some categories of banks anymore until they go out there and get back all non-performing loans. So as it stands, it is a good policy, but most importantly, policy formulation is not as important as policy implementation and efficiency of the regulators when it comes to transitions like this.
So yes, talking about implementation, we understand what the Apex Bank is trying to do, but then in order to balance things, what measures could be taken to improve liquidity in the banking system in as much as trying to ensure that banks stay on the side of the right path of engagement, rule of engagement when it comes to dealing with customers and the currency?
Okay, some analysts may not want to agree with me, and some people may not find it interesting what I'm about to say. We tend to focus too much of our analysis on the monetary policies, and we forget that one major driver of what determines the flow and oversupply of money into the Nigerian economy is actually the fiscal health of the country and actually the fiscal discipline of the federal government and the state government as subnationals. So I would rather take the argument away from the monetary policy and bring it back to fiscal policy, fiscal discipline, fiscal indiscipline, and the fiscal health of the country. What does that mean? We're having problems with economic freedom in Nigeria today. The index for economic freedom puts Nigeria at 54% or 54 index, a 54 rating, which places Nigeria as 124th freest, from behind. And that's not a very, very good score out of 160 countries. That means that the government is spending and putting too much money out there, and the tax burden on Nigerians, like you can see from the removal of subsidy and other taxations and multiple taxations on citizens and corporate citizens, is obviously, one of the major problems that is even responsible for the excess liquidity of cash in the economy. So what what I expect the central bank to do is to advise government properly, not what we saw in the last administration, where the way this was used to print more money and flood the economy with so much money, and that contributed to catalyzing the problems of foreign exchange, to catalyzing inflation, to catalyzing interest rate, and to stifling the growth of the Nigerian economy. So
Kenneth
I would want the central bank to redirect its attention to helping government curb expenditure and curb recurrent expenditure and focus more on capital expenditure. That will boost the growth of the economy, and that will, put the banks in an appropriate position to actually do proper banking.
Kenneth Ikenwa, thank you so much. It's always nice having these sort of discussions with you. We appreciate that.
My pleasure. Nice seeing you again.